So let me start by asking Hemendra Hazari first, because very clearly, if the expectation that the researchers at Hindenburg had, that their short sell and the buzz that they created would be able to trip the FPO, that hasn't happened. The FPO has been able to go through. I'll come to Salman Soz and Narendra Taneja on the political dimension in just a moment, but in the money markets, what do you think happens next?
See, very clearly this is a positive because when one of the world's largest billionaires comes out with a large issue, we expect it to sail through because that shows his influence in the system. So here there is been, I think, a positive. It is definitely a negative for the Hindenburg folks. But we have to see really, because the Hindenburg folks have taken a position on the foreign debt which is listed on foreign exchanges. And how does that take place? Now today the debt did recover a bit, and we have to see now how the market responds. Because currently the share price is still below the follow-on public offer. And the individuals who have really bought and rescued this offer have been non-institutional players, mainly coming from the family offices of the very super rich and the super high net worth investors. It is pertinent to note that the institutional investors have only come in just about to what they have been allotted. And the concern here is that institutional investors, if they had invested in this climate, their own boards would have raised objections and they may not have cleared it. So it looks like for the immediate future, it is the non-institutional players who will be examining this issue. But with this 20,000 crores coming into the Adani coffers, their whole debt equity ratio changes because they may partly reduce their outstanding and more expensive debt. What is critical is how does the market take it forward from here? Will they continue to show some concern on the Adani counters? How will the foreign debt prices which are listed abroad take this issue? If the yields of Adani paper continue to remain high, then it will send a very negative signal to the general market. So that is what we have to watch for going forward.
Okay, you mentioned the debt of the Adani group. I'll take out a graphic from the Hindenburg research to basically explain the net debt to EBITDA ratio, which is earnings before interest, taxes, depreciation and amortization in comparison to industry averages. And one of the reasons why the Adani group came out with this FPO was actually to make more equity available to the common public and to other investors outside of the promoter holding. So for example, in Adani Green Energy, the net debt to EBITDA ratio is 12.1, the industry average is 6.3, and it goes on, and in most companies, except say Adani Total Gas, where it's 1.5 versus 4.1 for the industry average, the charge level is that the group is over leveraged. Now Gautam Adani answered that question in the interview we did with India Today to say that the net debt to EBITDA ratio has actually been coming down and the leverage situation is now much better than it has been in the past, and the FPO makes the situation even better. Subhash Chandra Gar, if you were in the finance ministry at this time and this kind of a report were to come out, what's your best sense of how the powers that be in government are looking at what's being said? Are they thinking of this as a matter in the money markets, or is this something that the government would be looking at carefully?
See, I would tend to look at from the policy and the regulatory perspective. The fact that a large issue comes in the market and is subscribed, but honestly, how it has got subscribed, under what conditions and what terms people, the institutions have put in. The retail investors have not put money there, even employees have not taken their quota. So it's not a normal subscription of the issue. Then the fact that the P ratios or these kind of metric which are important from leaving something for the retail investors and others on the table, those are highly adverse. The policy is that the SEBI does not sort of interfere in the pricing of the issue, but these are very important issues when the public institutions invest money. For example, LIC or SBI Life and others who have put in money. So one would tend to see this as a case where some of these other mega issues like the Paytm's case earlier and LIC's own issue, where the promoters try to raise enormous amount of money at valuations or at something where perhaps the integrity of the market or the soundness of the market is at test. So I think, and the report which you referred to, Hindenburg report, does throw up some issues which need to be looked at from the policy and the regulatory perspective. So to me, the experience of this issue would be that somewhere in the system, in the policy making, shareholding, raising issues, we should be doing some serious thinking.